So I'll just give everyone like a quick brief on like, how this will probably work. Before we start, so again, I think you got both the Zoom recording and the OBS on your side.
Yes, hold on, I'm doing things.
Okay, so essentially we'll spend like the first half or so just covering, I guess, like a few questions that you all had when you guys submitted the sign up form. So, all of you submitted, certain things that you were not sure about when you guys speak to VC, so on and so forth. So I basically categorized that into like, 5 main pieces of feedback. And Hsu Ken's gonna talk through some of these. And at the end, like we'll have like, 20 minutes for Q&A. Does that work? Like, and during the thing, like if you guys have questions and stuff, like, I don't know, feel free to like just put it in chat, put up your hand, whatever works.
And as much as possible, everybody, let's just make this kind of interactive, like just put questions in chat. We'll stop, try to answer stuff and all of that. So yeah, by all means, kind of like just throw stuff in chat. Madhu will kind of call it out.
Yeah, so chat is live, like I'm monitoring it. So just go for it, yeah? Okay. We can start. Do you want to like kick it off by giving, like a quick intro on like why we even decided to do this?
Sure.
Yeah.
Yeah, so I think, as this was one of the most frustrating things when we were kind of starting out is that we would take investor feedback very like literally, like it is absolutely what they meant. And then it was hard to kind of understand sometimes like what it was. And it wasn't until later we found out that we learned that investors often don't say the real reasons. And so, some investor tells you something, you make some change because of that feedback, and then you find out that investor, that's not actually why they didn't invest, and you just change your company because of it. And so one of the things we kind of learned was when to kind of take investor feedback kind of like literally and kind of like honestly, and when to kind of like not. And then depending on what the investor says, like what do they actually mean by that? I've gotten a lot more clarity on this now that I'm on the kind of investing side and kind of have to do this all the time and kind of give feedback as much as we can. So hopefully kind of helpful to people, but as much as possible, kind of just like remove the confusion kind of around investor feedback here.
Okay, awesome. We can kick it off. Let's go to the first one.
I haven't seen these, by the way.
All right, so it's trial by fire.
This one's funny. Okay, let me kind of explain something about VCs. They all want to keep optionality. And what I mean by optionality is they don't know who's going to be like the next big company. And so they would all prefer to kind of like push an actual decision until later. And this to me is partly kind of like them trying to preserve optionality, right? So they're like, hey, let's talk in 6 months when you have more traction, which basically means, hey, let's talk in 6 months when, you have kind of like more evidence that I should kind of invest in this, which the reality is when you do, then your valuation goes up and all that kind of stuff. So sometimes I feel like investors actually kind of mean this, but primarily they're just trying to preserve their optionality and kick the like decision kind of like down the road. There's no real value to an investor telling you no. I always want the option to invest, right? And so they can kind of just continually kick this down the road. So I don't know, I wouldn't put too much stock in this. It also typically means sometimes that the investor has a different reason that they don't want to invest, and they're kind of just like giving this one because it's easy. Like all forms of this are like, you're too early, show more validation, all that kind of stuff are kind of forms of this. Sometimes investors, if their feedback is actually they're like not convinced by you as a founder or a team, they can't ever say that. So there's an entire class of feedback that investors will never tell you, which is like, they may not kind of buy you as a founder and kind of how you're going about it. So that's a separate kind of like conversation. But this one is more or less like they're kicking the decision down the road.
Okay. Do you want to like talk more about this? Should we move on next?
No, people have comments and stuff in the chat and specific stuff. Put them in there. We can circle back around. But yeah,
does anyone have like questions and stuff? Like, feel free to like just include it in the chat. Anything?
I see your Notion, Madhu.
Oh, you see my Notion?
Yeah, just for a moment. Yeah.
Okay. All good. Okay.
Excellent.
So yeah. So
this is the same thing. This is
Okay.
the same. It's basically the same response, right? Looks interesting, of course. Why would they tell you it's not interesting just in case it becomes interesting at some point in the future? Keep me updated. Love to like it's the same thing, basically. They're kicking the question down the road.
Got it. What do you think like founders should do if they get this? Like, should they actually keep like VCs updated? Like, what's the right
Oh,
way of
good
doing
question.
so?
Yeah, good question. Yeah, totally. So one thing that we always kind of did is we always kind of had short list of investors, especially if they kind of say something like this. We would always send people a investor update, even though they're not our investors, which is a sanitized version of our actual investor update, which is just like the highlights of like what you've been doing and kind of like how fast you've been growing and all that kind of stuff. The reason why is you're kind of building a relationship with investors as you're going along, even if they're kind of like you're too early for them or like whatever. And so you're kind of building this relationship as you go along. So it's not a bad idea, but you need to make sure that the updates you're sending them are good, because they could also kind of like be less inclined to invest depending on the updates. So, if you have kind of strong growth and you're learning a lot and you're on a good trajectory, then I think it's a good idea. If you are not, then I think it's a little bit tricky. So you kind of want to manage kind of like how to do this. You can do it also in different increments. And so, you don't have to send it every month. You can send it every 6 months so that you have some time to kind of like find some like bright spots to talk about and that kind of thing. So yeah.
Got it. Okay. I think so. Two things, right? I think myself, I remembered some questions that I had, and I think we're getting questions about traction. You mind if we just skip back for a second?
Sure. Yeah.
So I think I'm sorry if I'm butchering this, but like, is it wise, he's asking, is it wise to ask how much traction is considered enough traction?
Is it wise to ask the investor?
Is that what you're asking, Jingzhe? You can like unmute and talk.
Yeah.
Yeah, that's what I'm asking. Like when someone says, yeah, you keep us updated, we'd like to see more traction. Is it wise to ask the investor the question, when is it really considered for you enough traction? Because sometimes they just keep kicking down the road, right? And you sometimes want a bit of action. Is it too much to ask in Southeast Asia context? And I don't know how like culturally some investors prefer to be more chill, especially overseas. Yeah, how's it like? Yeah, what in your experience? Yeah.
I think it's okay to ask, but I don't think they're not going to have an answer for you, if I'm being honest, right? Because there's no real kind of like magic traction numbers for kind of like businesses and stuff. And so I think you could definitely ask. I don't think there's anything wrong with that. But I don't know if they're going to have a great answer for you. And whatever answer they give you, they're just going to be plucking it out of their like head at that moment. So I wouldn't put too much stock into it. It's not like they have a head number in their head and then they're giving you this reason. They're like giving you this reason, then you're going to ask them and then they're going to come with a number. The judo move that I actually would recommend here is talk to them about what they would like to see kind of more broadly. Like, hey, what are your biggest concerns with the business? Like, what are you kind of like what are your concerns, right? And so if they talk to you about, oh, we don't know how big of a business this could be like, okay, well, talk to me about that. Okay, right? So like, how big of a business do you think it'd be? Why don't you think this thing is kind of like big? And so you're now turning it into a conversation with them to try to learn how they think about stuff. And that tends to be the like move that Brian and I kind of always do. So we get some better understanding of it. This also has the added benefit of the investor. We always like this too. People should do this to us. It shows the investor that you are genuinely curious and you can like simultaneously believe in your idea and entertain the position that the idea may not work. So the worst founders, when in their responses are just like, kind of just like, they can't imagine a world where this doesn't work. And they're just like, you're dumb, you don't believe this or whatever. So they don't take the feedback constructively. And the best founders are like, okay, cool. Like, talk to me about this. Like, I kind of think this works. You feel that the customer segment is too small. Why does the customer segment feel too small to you, right? Like, okay, is there another customer segment that you are kind of like more bullish on? And when you start engaging with them on that, they're like, oh, okay, this guy is like genuinely trying to figure out his business and he can entertain it. And you kind of get in this good conversation. And at some point, they just start helping you with your business where they're like, oh, yeah, maybe you should go into this. And you're like, oh, yeah, maybe we should go into that. And you're like, so the judo move, I think there is like, rather than asking for a specific question, like drill in harder about kind of what their position is and be like, and by the way, traction, I said this in another thing, traction is just evidence of your hypothesis. So the thing that I would ask them to is like, what other evidence do they kind of like need to see? And don't say it in like, what else do you need to see? Say it in like, hey, I'm genuinely interested. Like, what else would you need to show? Traction is actually just like one bit of this, right? So to have that kind of conversation, I think is interesting. Does that make sense? Okay, cool.
So this is like fresh in my mind because we just finished this, right? Can traction sometimes just mean like, hey, we don't have validation that this works yet. We're not seeing that yet from you. Could that just be it? Or do you think it's not really the case?
Sorry, can you say the question again? I don't know if I understood it.
So when VC say something like, come back to us when you have more traction, does that just mean like, hey, you need to go validate your idea?
Yeah,
Is that like their way of saying this? Okay.
Traction, I think oftentimes, especially if you're very early, is kind of like, it's a like, people use it kind of interchangeably with kind of like validation and all that kind of stuff. When you're later stage, it means a very specific thing, like what is your revenue, how fast are you growing, that kind of stuff. But I think in these kind of early days, it's like traction you can substitute as like evidence that this is likely going to be a good business.
Okay, got it. I think like on a related note, so okay, I'm not sure what your names are, but like see two of you on the screen. So they're asking like, what does a pre-seed VC usually look at if the company has yet to find product market fit?
Yeah. Okay, so we have Madhu has heard me talk endlessly about this. Product market fit is a often used term that is has no definition and basically is like just misunderstood all the time. So I don't know what you actually mean by product market fit because it's not, there's no actual definition of this. Let's take this back a little bit. Pre-seed VCs and investors in general want to invest in a company that is going to be worth a lot of money. At the early stage, it is not clear whether a company is going to be worth a lot of money. So what they're looking for is there evidence and signs that this is likely to be a company that is going to be worth a lot of money? And typically what that is around like, is this a problem that a lot of people, is this market really big? Let's break down market because it's often confusing. I think of market in two ways. Market is defined by the problem the startup is solving. A large problem is a problem that lots of people have, and for each individual person feels the problem acutely, right? So there are some problems that everybody has, but like kind of just annoying, right? Okay, that could be a pretty good company, but not a huge problem. There's some problems that very few people have, but they're very painful. Like the pain is quite acute. Just to be facetious and kind of like pick a like ridiculous answer here. It turns out not many people have cancer, but the people who have cancer, it is the biggest problem that they've ever kind of like had in their life, right? And so that's kind of one set. The best markets and the best problems are problems that lots of people have and they feel very acutely, right? And if you've got that, then you've got a really good problem. Okay, so that dictates market size. Then the next part of this is there evidence that the people with this problem, assuming it's big, want what you are building, right? And that typically comes down to like validation, evidence, traction, or whatever, but there's lots of ways to kind of like show this. And so early stage VCs, that's basically what they care about is like, do we feel like the startup is working on a really big problem? Is there evidence that they might be onto something and the people want the solution that they have? And then maybe the third piece is, do we believe that these founders are going to be able to like navigate this whole kind of like startup around like, okay, we have kind of the right solution, but not really. Okay, can we hire the right people? Like, are the founders going to be able to kind of like make good on this like space? So I think it's those three things.
That's awesome. I think that's really useful. So it's like market, validation, and then like team. Just to like maybe push a tad bit further, would you like rank any of like, would you rank them in a certain way or not really?
Market first by far, for sure. And this is like, I think a lot of people are like, oh, it's definitely founders, it's definitely founders. And I used to believe that. And I think after doing this for a long time now, it's market. I have a lot of friends who are maybe the best founders that I know working in a crappy market and they don't get anywhere, right? Like if you think about it, like, I don't know, if you live in Singapore and you're trying to sell heaters, like that's kind of just a crappy market. Singapore's hot. Like, I don't care how good you are. Like Elon Musk couldn't sell heaters to Singaporeans, right? But selling heaters to people who live in Antarctica, you don't have to be that good, right? Like people just need this thing really bad. And so I think about market. If you're in a really good market, you're like playing a video game on easy mode. And if you're in a really bad market, it's like playing the video game on really hard mode, and it just kind of shows up everywhere. I don't know how to rank kind of solution, evidence, team, maybe team first after that. Yeah.
Okay, cool. All right, I think Melissa had like a question. Melissa, you want to just like unmute and ask?
Yeah. Hi, Ken. Can you hear me?
Hey. Yes.
Yeah. Hi. We are currently pre-revenue for the company, and one of the VCs that we met actually asked us for more detailed financial projections and milestones. Yeah. So what's your take on this?
You want my honest take?
Yeah.
Wait, how long have you been working on your startup?
Maybe about, say, for this idea, say about 6 months.
Okay. My take here, this VC doesn't really know what they're doing. Here's the reason why. You don't know not nearly enough about your business to make financial projections. You literally haven't made any money. Like, what financial projections, right? You can definitely make financial projections, but like, they're going to be nonsense. I know they're going to be nonsense, right? It's like, hey, Hsu Ken, make financial projections on this hot dog stand that you haven't started and haven't sold a single hot dog, right? It's like, how? It's just all guesses. So the reality is, I think, like, this doesn't happen in Silicon Valley. This only happens in Southeast Asia. Like, nobody in Silicon Valley worries about projections at a pre-revenue startup, because it's like, you don't have revenue. So how are you going to project on this thing you've never seen? So it does happen here. They are obviously asking you for it. If you like the investor and you're willing to put some work here, what I would do is just like do a best guess faith kind of like model here, which is like, how much do you think you're going to make per customer? How many customers do you think you can reasonably get? Like, map out retention rates, all that kind of stuff. It's just going to end up being an exercise in like how you think about your business and how you imagine it going. I hope the VC doesn't take it as like, these are actual kind of like things you're going to hit, because honestly, you haven't even started getting revenue. So it's like very hard to do these milestones. So I wouldn't spend too much time, but like just build in some assumptions that you think are kind of reasonable, and then kind of do it from there. Yeah. Does that help?
I mean, that's what we are already doing. So, but yeah, because for us, it's like what you mentioned, the financial projections, the guesses are as good as yours and mine. And
yeah, totally.
So yeah, okay. But anyway, yeah, thank you.
Yeah, you're not doing anything wrong here. Like, that's just kind of the reality of it, right? So just do your best, and then kind of like keep it going.
Thanks.
Yeah.
Okay, cool.
I hate when investors ask for that, by the way. I hate it. Adding extra work and making everybody guess on things that everybody knows is not right. Okay.
Okay, next one, valuation. So a lot of people have been asking, if the VC says the valuation is too high. So I guess like maybe like 2 follow-up questions, like, what's the next step for founders? And perhaps the other thing is like, in what, like, maybe give people like a framework to think about, in what cases would you actually bring down the demand of your valuation for like a certain investor?
Okay, let's talk a little bit about valuation first, in case it's not clear to everybody. There is no magic formula. Your valuation is whatever you can get somebody to agree to, right? Like, if you're thinking valuations for early stage startups, like, oh, it's some revenue multiple, like, that's not how it actually works. That's how you value late stage companies, and you do like private equity and that kind of stuff. Early stage companies, like, nobody does multiples on stuff, because you're all basically potential, right? So that's, valuations are just like whatever you can kind of like get somebody to agree to. We've had companies in the batch start at 1 valuation, and their end valuation was like it was like 7x what they started. Like, there's no kind of like logic to that. It just, lots of people wanted to invest and they were willing to pay higher prices. So it's just a market. Okay, VC say the valuation is too high. A couple of things. I would then judo move and ask the VC, be like, hey, what do you feel like is a reasonable valuation? Right? Just ask them, see what they say, right? And there's no harm there. You're not agreeing to it or anything like that. You're just getting a sense of kind of like what they think would be a fair valuation. Whatever number they say, ask them why they think that's like a more fair kind of like valuation. And the trick with all these judo moves to ask them questions is like, don't be defensive when you ask the question. Don't sound defensive. Just be like genuinely curious, right? And ask them what that is. See what they say. You don't get to be that choosy on valuation if you don't have more than one term sheet. Like, if your company is going to run out of money in the next 3 months, and somebody gives you a term sheet and they're like at some lower valuation, you can not take their money, but then your company dies. So you just don't get to be that picky, right? Now, you can make the debate about whether you're willing to take the lower valuation or the dilution or whatever, but you got to have an honest conversation with that you're running the risk of the company just like dying because you don't take this deal. So optimizing for valuation is only a thing that you get to do if you have like more than one term sheet, so you can kind of play them off each other. Okay. So I think that's kind of the general like thing there. Madhu, your question was around like, when is it okay to take a lower valuation?
Yeah, like maybe some frameworks to think about this.
Yeah. I mean, if you're going to die and they're the only offer on the table and you don't want to die, you kind of don't have a choice, right? Like, just practically, you don't have a choice. Like, you have to kind of take it at whatever. Now, you might look at it and you should do the math and you should work out how the dilution works and whatever. And you could find out that like at this valuation, it just doesn't make sense for you to continue working on the company. That totally makes sense, right? If you get to that point and you want to make that call, make that call. But I think you have to kind of see what's out there to kind of like make it. What I would do if you're getting this a lot is your valuation actually might just be too high, and it's hard to kind of gauge because there's no rule books to this or whatever anyway. And so honestly, it's really hard for founders to kind of get a sense. That's where you start asking people, what do you think, what they think is kind of a fair valuation. If you ask a couple investors, you can start triangulating a little bit. So that's kind of where I would be to find out. If you have existing investors, and I don't know if people do or not, if you have existing investors, you can ask them and you can be like, hey, you're in the market. What are you kind of seeing certain valuations at? And they can kind of like help you kind of adjust. But honestly, I think the real trick here is like, do you have more than one kind of like term sheet or not? If your valuation is lower than it should be, you probably have more than one valuation, so it'll push it up. And if your valuation is actually too high for the market and you have no term sheet, then it pulls it down. So it's just like classic market kind of like effects.
Got it. Okay. I'm not sure what like you guys' names are, but like
Glints Vietnam. It's Glints Vietnam.
Do you want to like unmute and like ask the question?
Hi guys, hi Hsu Ken, nice to see you
Hello.
again. Okay, so yeah, I'm just curious about what Hsu Ken has shared earlier. You mentioned like VC also looking at like whether the solution the startup provides what the customer want. So over and above and looking at the past validation that the startup have done, is there any other thing that the VC would do in order to validate this?
What stage? Early stage. I'm just assuming all these questions are about early stage investors.
Yes.
Okay. Over and above looking at past validations, I mean, they look at traction first of all, right? So if you're working on something that customers want, you should be growing quickly. So I think that's the like immediate litmus test. And if you're not growing, then they'll be like, are you sure people want this? Because you should be growing faster then, right? So I think that's the immediate litmus test. The other thing that VCs do is they honestly just like think about it and they're like, does this make sense to me or not? Like, do they believe in kind of like what you're doing and having a thesis around that? So they kind of do that. They could 100% be wrong. So, I don't know, there's like that, but they definitely do that. Some VCs will actually talk to customers. So if you sell something to like, I don't know, XYZ retailer, and they may actually reach out to XYZ retailer and be like, hey, do you like using this product and that kind of stuff? That tends to happen more at later stage companies where they will do kind of like VC equivalent of reference checks where they would call your customers and stuff. Early stage, not as much. Early stage is like, does the investor believe in it kind of personally? Like, does it logically make sense to them? And then they look at your traction for the most part.
Thank you.
Yeah.
Okay, I think we have a question from Melissa. Do you want to like unmute?
Yeah, hi. Sorry, another question relating to valuation. I'm not sure so if it's the right term, but okay. Anyway, we have angels and we are speaking to angels and VCs, and we have angels who have verbally committed, and VCs are just like hanging around. So, should we close the round first with the angels, and should do we close it at a discount?
Yep.
Yeah.
Okay. Let me ask some clarifying questions because I think it matters. Do you need the additional VC money? Like, are you going to die?
It's not going to die, but obviously, with the money, it means that we could hire up more. But I mean, without them, we'll just work with the leaner team. Yeah, and with reduced targets. Yeah.
Oh, reduced targets. Okay. Is it like significantly kind of different? Like, how badly do you need more money? I guess is what I'm trying to figure out.
Yeah, quite badly. Like if I don't, then we probably have to kind of, get ready to dock the ship somewhere. And yeah.
Okay, so it's quite bad. Sorry, not quite bad, but it's like it's material. It's a material difference. Okay, typical kind of advice. The typical advice that we give here in kind of like better times is take the angel money and then kind of like close the round, and then you can kind of like come back out later. The reason why we typically give that advice is because if you are just perpetually fundraising, it's a huge distraction, right? Like I'm sure if you're talking to VCs and stuff, it's just such a huge distraction. You're not working on your business, like, you can't grow and all that stuff. The worst case scenario is we see some startups get into this vicious cycle where they're having a hard time fundraising. And maybe because their growth isn't kind of, I don't know your situation and it doesn't matter. You're trying to fundraise, your growth dips because you're focused on fundraising and not kind of growing your business. VCs don't want to invest because your growth is like dipping. You keep trying to fundraise, but your growth keeps being kind of down because you're not focused on it. And then you just get in this perpetual state where like VCs don't want to invest because your growth is not that strong. And then your growth is not that strong because you spend all your time talking to VCs. And so the thing we try to tell people is like, raise the money that you can, close the round, get back to work, and then you can kind of come back out in some period of time, like, months, to kind of like raise more at kind of like when you have kind of that growth to show. It's a little bit trickier if you really need the money. That's why I was like asking like how bad you kind of need it. But I think the thing I would say is it also depends on how your fundraising process has been. At some point you kind of been talking to a lot of people and you kind of run out of people to talk to. And it's like, you have to make this decision of like, do I keep banging my head against the wall, or do I need a new pitch? Do I need to be able to show more growth before I come back out? Sometimes it's not about just like talk to more kind of investors. Actually, I think in the batch, we have a 3-month check after demo day where we're like, do you have some like serious momentum kind of fundraising or not? And if you don't, you should maybe kind of like stop fundraising for 6 to 9 months and kind of like get back to work and see if you can get growth and then come back out and try to fundraise. So yeah, I don't know, Melissa, is that helpful? How are you guys thinking about it?
Yeah, I mean, I just wanted to hear, like from your advice from a fellow entrepreneur, like what would you have done in my situation? I felt that I would also stop the fundraising at the moment and take, even if that little amount of money, to continue to build the team and the business. And eventually when we have even more growth, I think maybe then that's where we also would have the traction that they're talking about. Yeah, for the VCs who are, because of course the money is a bigger amount, so they probably need more evidence. Yeah.
Yeah. And sometimes you kind of just need to work your pitch, right? When you kind of work on it more and that kind of stuff. So yeah, it's a tough spot though. Tough.
All right. Thank you. Thank you for sharing. Yeah.
Yeah, sure.
Okay, we can move on to the next. Okay, insights. So what happens if a VC says you just don't have enough insight on the problem, customer, so on and so forth? Quite a hotly asked question though.
I laugh at this because I feel like I say this a lot. Okay. I think the best pitches that we typically see are the ones that have some sort of insight into the problem that is like surprising or is like non-obvious. And the reason why this is important is because typically your startup is built around insights. And so if you have an insight that very few people kind of know or is like not obvious to people, then it's like, some secret about this problem that other people don't know. And then you can use that secret to exploit how you solve that problem. So sometimes people are like for example, I don't know how many Singaporeans are in here, but we get so many applications for dating apps by Singaporeans, and they all say the same thing. Dating is hard. Yeah, no kidding. Like dating has been hard since the beginning of mankind. Like there's no insight into that, right? It's like, yeah, dating is hard. So they're like, oh, dating is hard, so I made an app. It's like, everybody made an app, right? There's nothing unique about this. And so it's not clear to me that you're going to be able to solve this like dating is hard problem, because like there's nothing, you don't know something that other people like don't know about this problem. You don't have some unique hypothesis about it where it's like if Madhu was pitching me like, I'm making a dating app. Dating apps are hard. Dating apps are hard because it turns out dating is all about like the thing you eat on Sundays. I don't know, I'm just making this up, right? And I'm like, the things you eat on Sundays? I was like, why does that matter? And if he has some compelling evidence for like, or reason for like why that's the thing that matters, I'm like, okay, well, I think he's kind of crazy, but if he's right, at least he has like a clear thing to stand on, right? Where like this startup is built around this one insight. And so I think that's what we mean here is like, what is the thing that you understand about this problem that other people just like don't understand or don't agree with or whatever? And whether you know it or not, you're basically betting the company on this insight. And if you don't have it, then we're not sure what we're betting what the company is being bet on.
Okay.
I can just a question here regarding this statement. So I mean, from your personal experience, do you actually try to understand like what, because it could be a pitch problem or it could be a real problem, right? That they don't have insight. So do you actually try to understand what the startup is trying to say, or it's like what you see is what it is? Yeah.
We do try to understand a little bit, but there's only so much time we can spend with an application, right? So like 2 weeks ago, we got 150 applications in 1 week. I can't spend half an hour trying to be like, what is this startup trying to tell me, right? So we do try a little bit. And so it's, we try to go beyond the communication problem a little bit, but just like practically, I can't kind of like spend a bunch of time kind of just like trying to understand what it is. And then sometimes you're kind of guessing at what they think it is and that kind of stuff. And so I think practically it's just problematic. I also think we spend more time than other VCs doing this. So if you're expecting other VCs to kind of get this, it's unlikely. The other thing too is that if you have even if it is a communication problem is actually a very big problem for a startup founder. As a startup founder, your primary, I don't know if your primary job, but it's kind of close, is like, can you convince the world of things? Can you convince investors to give you money? Can you convince users that they should use your product? Can you convince employees to come work at your company? It's like, can you convince people of stuff? Which comes down to communication. And so I'm not saying you, Melissa, but if a founder has a hard time communicating kind of like their problem and kind of what they're doing and stuff, does that also mean that they have a hard time communicating kind of to their users and kind of like to employees and all that stuff? And then that is going to make their job kind of more challenging. So we look at it a couple of different ways.
All right, thank you.
Yeah.
Maybe just a add-on question is like, what would you say, like, from the companies that we've invested in, like, what would you say are like the sources of like these insights or secrets? Would you have like?
Yeah, there's a couple of things. There's a set of secrets or insights that come in industries that are like very unsexy and very few people know about them. So here's a good example. Before Iterative, I was thinking about looking for problems in semiconductor manufacturing. Now, the only reason I was looking at semiconductor manufacturing is because my father's entire career was semiconductor manufacturing. And the whole thesis for looking at it was not many startup people have an into semiconductor manufacturing. So there's likely a lot of problems in semiconductor manufacturing that just people haven't been exposed to. So maybe I can find like an insight to build a company around because not many people have looked at this. If you're doing something like food review apps or something, it's like every freaking person has like insight into food reviews. And so in order for you to have a unique insight into this thing that everybody knows about, you need to be like very observant or have like a very kind of different take. So there's two ways you can look at it. You can like look at spaces where very few people have looked at, and then it's kind of just easier because very few people have looked at it. And so you can think about it. Or you can work in spaces that everybody has kind of looked at, but you need to be one of these people that like has like very unique kind of like views on the world and kind of like thinking about it and stuff. So, there's competition with insights, I guess, is maybe my point, which maybe people don't think about, right?
That's interesting. I don't think like we hear that often around like the competition for insights.
Yeah.
Okay. The next one.
Yeah.
Your business is not venture-backable.
Yeah. Okay. So venture capital is built on a model that it doesn't matter how many times you're right. It matters if you are right, how big the company is going to be when you are right. So for example, if I invest in 100 companies and 99 of them completely fail, but the one company that works is Google, I am like a wildly successful venture capitalist, right? And so everybody's hunting for these like huge companies. When people kind of say this, it's two things. One, they don't think that your company can be that large. Like they don't think it can be on the scale of kind of that. And when I say large, I mean in the US, it was like $1 billion company minimum. If you have no chance of being $1 billion company, they're not investing, right? Southeast Asia, I feel like it's like a little bit smaller, but if you have like no chance of being like, at least for us, like a $250 million company in the like optimistic scenario, we probably wouldn't invest, right? And so they're looking for those companies with those ceilings. The other thing they're trying to figure out is how long would it take for you to get there? So for example, if you're, I don't know, like if you're investing in a restaurant conceivably at some point could be worth $250 million in Southeast Asia, right? It probably takes them 20 years, right? And so the two time components here is how big can this be and how quickly could it potentially get there? Venture capitalist, we raise funds. Our funds have 5 to 7 year life cycles. So we just raised the fund, LPs gave us money. They want money back with profit within 5 to 7 years, ideally. If I invest in a company that doesn't make profits for 20 years, my LPs are actually kind of upset with me, right? And so there's this like time horizon on like, okay, can you be a really large company in this like 5 to 7 year, 10 year kind of like time frame, right? And if you aren't, then you could actually be running a very good business, but it's like not appropriate for venture capital because they're bound by these like how much it needs to be able to kind of possibly do and when they can return money and like all that stuff.
Okay. Does anyone have questions about this? Feel free to like unmute and ask. This was actually like quite heavily asked.
Yeah, I bet. This is one that we get a lot too.
Anyone? No. Okay. I remember you like saying something like, how much effort does it take to get to $1 million?
Yeah,
is that like a good way to gauge this or not?
Okay, I have no idea. What Madhu was talking about in the context here is when I was looking at ideas, I used to do, before I even would work on an idea, I would do back envelope calculations on how hard it would be for this business to make $1 million in profit. And here's what I mean. If I was, let's take Grab, for example, and I'm like, if I was Anthony Tan and I was like sitting down and I was like, okay, is this going to be a good business or not? I would be like, how many rides do I need to do in order to make $1 million of profit? And if the answer turned out, and you have to work out some kind of like Melissa Tier thing, you have to work out some kind of background projections, right? And you're like, okay, average ride is, let's say like $10. I think I can make $1 of that. So I have to do 1 million rides to make $1 million in profit. Shit, that's kind of a lot of rides, right? Just to make $1 million. Like, okay, is that a good business? Like, and I'm just thinking about the scale of what I would need to do in order to do 1 million rides, right? And I'm like, okay, if I got to do 1 million rides, how many drivers am I going to need for that? So if I have 10,000 drivers, then I need them to do like 1,000 like rides a year to make $1 million. Like you start just like doing the math, right? So, but if you told me, oh, all I need to do to make 1 million rides to make $1 million is to do like 1,000 rides, I'd be like, holy shit, that's a great business. Like I think I could do 1,000 rides, right? But if you were like, I need to do 10 million rides to make $1 million, I'd be like, oh, that sounds kind of bad. Like you're gonna have to do so much work to do 10 million rides, right? So I kind of do the back of the envelope, kind of like just like how much work is it gonna take to make $1 million?
Okay, that was good. Yeah, because when I first heard that, I was like, oh, that's like a good way to like kind of quickly think about something like this. I think we have like
I should write that down. I should show people how I've done that in the past.
Yeah. Okay. We're like kind of like come to the end. We have a Q&A now. I have like one more backup if you want to go for that. So
whatever.
People have also asked like, oh, VC tells them that, hey, you're in a very crowded market. When they perhaps see this VC investing in, oh, yet another CRM, yet another sales tool, yet another, X for Y. What does that actually mean?
Okay. So It's okay. Investors don't have a hard, okay. Investors who are investing in spaces that have a lot of competitors, what they're looking for is, does this company that I'm investing in, again, have a unique insight into their market that these other competitors do not have? So here's a very concrete example. Uber, which was the first car like ride sharing company, did not actually work like you think Uber works today. Uber initially was professional drivers and black cars only, right? And so it was only that. And in SF, when we were using it, we were like, okay, cool. Like this is awesome. This works. Like, okay, there's not going to be anybody else that does it. And then Lyft came around, and Lyft was like, we are just like Uber, but the thing Uber gets wrong is we think anybody should be able to drive, not just black cars and not just professional drivers. We're going to start a company that does that. Now some people were like, no, I don't think that's a good differentiation. I don't think that's going to work or whatever. But now that they're a publicly traded company and everybody basically stole their model, that ended up being a really interesting insight that they built their company around and was worth investing in that despite kind of this like big obvious competitor. So if you are working in a space that is highly competitive, do you like the thing I always ask companies is, what is everybody else getting wrong that you're going to get right? And is that thing going to help you win the market? Because if you're going to do the same thing as everybody else, it doesn't give me any sense that you're going to be able to win this market, obviously, right? If you're doing something different than everybody else, but it's not going to help you win the market, then also bad business, right? So and this is basically differentiation, but like it needs to be something different than what other people are doing. And that differentiation needs to be sufficient such that you can win enough of the market. So I think that's kind of like what people are kind of talking about when they're talking about competitors.
Okay, that's awesome. I have I think two things which I think will be interesting for people to hear, because I've heard you drop these bombs during meetings. First thing is win condition. What is the win condition? This is something like I've heard you talk about, so it'd be great to hear you expand on this. And I think the second thing is when we see companies that are like, we do everything the competitor does plus one more feature, like that tick box competition. You want to talk about these two things?
Yeah, my huge pet peeve. Okay, yeah, the first one, win conditions is actually a term that comes from gaming, whether it's board games or video games or whatever, or chess even. It's just like, what conditions do you need to fill such that you win the game, right? So in chess is like, the win condition is you need to be able to take their king. So you win if they take their king, right? That's the win condition. In other games, there might be more than one kind of win condition. And so win condition is if you fulfill all the conditions, you win the game. You can actually think about this with businesses too. So in order for a business to win a market, what is the set of conditions what are the set of things that need to happen in order for you to win that market? And those end up being your win conditions. It's not an easy thing to kind of know for sure, but we find that it's helpful to have a working model in your brain about what you think those things are so you can actively go work on them, right? If you have no win conditions, it's kind of like playing chess, but you don't know how to win. It doesn't make any sense. You could just be attacking everybody's pawns and be like, okay, cool, I win because I take pawns. It's actually, it turns out that you got to do this other thing. So as you're kind of working in a space and kind of thinking about something, you want to think about what actually needs to happen in order for you to kind of win this space. And then obviously make plans against that. So that's something we kind of talk about. And there can be long-term win conditions and short-term and staged win conditions and all this kind of stuff. But if you actually Google the term win conditions, it'll come up with a bunch of stuff. Madhu, does that help?
That helps, yeah. Because I don't think a lot of people thought about that. I mean, I certainly never thought about that before.
Got to play more games.
Right. The second one was about the competition slide, right? The tick mark thing.
Yeah. Okay. So people don't win competitive markets because you do everything plus this one somewhat arbitrary thing kind of else. The thing, you only win the market if the thing you do differently is kind of differentiated enough where people are going to move off of what other people are doing onto your thing. What we found is you can't be 10% better or just do one thing. You have to be significantly kind of better for somebody to use your product. It has to be an order of magnitude kind of better. Otherwise they'll just stay with it. The reason why is there's inertia, and people just get used to doing something, right? So like Madhu sends me Excel files, which are just like annoying me to like all hell because he's very used to Excel and won't use Google Sheets, right? And you kind of do now, but like he just got used to using Excel, right? And so he just got used to using it, and Google Sheets was like not like significantly good enough for him to switch, to throw away all of his hotkeys and knowledge about Excels to like use this new thing. And so but for example, he does use Airtable now because Airtable like is like a very different kind of like thing that Excel cannot do. And so when you think about kind of differentiation, it needs to be like significantly different. We also think about when people are saying, oh, we do everything that Salesforce does, and then except for this one thing, we're basically like, okay, so you think you can do everything that this like $20 billion company in the US is doing and has been doing for like 10 years plus this one thing? Really? Do you believe that? Right? And the answer is like, there's no way you're doing it kind of like as well. So, you know, what is your differentiation? And actually, oh, sorry. The other differentiation sometimes is you actually could be targeting a user group that the other person does not, right? So oftentimes the early stage startups, they target kind of a long tail of users because maybe there's like an enterprise kind of like company that's like old school and whatever, and they take all the like high expensive kind of customers, but startups kind of work on the like long tail of startup companies that like SAP doesn't care about. And so you kind of eat into those and then you kind of work your way up.
Okay, awesome. Hey, Olivia, do you want to like unmute and ask?
Yeah, hi guys.
Hello.
So my question is, a little bit based on the strategy with the Rocket Internet.
Mhm.
So what's your take on those type of strategies in Southeast Asia, especially if you're taking an existing idea, then looking for a quick, product market fit, you see that it does sell here. Are you more interested in these type of strategies? Because a lot of the apps ideas that I do see are quite, let's say, aligned with like this copycat type of implementation in the area, right?
Yeah, I think we're kind of purist in the sense of like, if you are building something that's like helpful to people and solving a problem and they're using it and all that kind of stuff, I frankly kind of don't care where it comes from, right? Like if people are using it and they like it and you're solving a problem, like I'm happy to invest in it. No points for kind of like originality from me, like I don't care. The one thing I would kind of say though is all of the quote unquote copycats, as far as that I know, there's a fair bit of localization that comes in. It's like never quite as easy as just like, okay, you just like take this and move it here, right?
Yeah.
So it's not like it's obvious that these things can kind of work, and some copycat ideas don't work here, but they work in the US, and some, and vice versa. So, I do think there's quite a bit of work to do here, even though you kind of like see a model working somewhere else and then want to apply it here. So yeah, I'm happy to invest in it. I think most VCs are happy to invest in it. Frankly, I think most VCs find it easier to invest in these things because they have some like evidence that this works somewhere else. So not very original, let's say, but kind of like works, right?
Okay. Do you know of any startup studios that focus on just executing this type of strategy throughout Southeast Asia? Because if you do have great execution skills, then it would make sense to just focus on this, right?
I totally. I don't know if I know any, to be honest. I know a fair bit. There's definitely startup studios in Southeast Asia for sure. And I know the US ones like Atomic and stuff, but they kind of do their own ideas, so they're not copycatting. I don't know if I know one that does specifically copycats in Southeast Asia. Yeah, I don't think so. That could be an idea.
All right. Cool. So would a VC be interested in investing in one idea, or would they be even interested in investing in a startup studio if they have like proven execution abilities?
So I think one startup I think is the easiest, kind of like more straightforward. Like everybody's basically used to that, right? So that one's kind of like no problem. Startup studio, all of my friends who run startup studios, they basically raise their own fund.
Yeah. Okay.
Right. And so they don't typically, and maybe they take money from fund of funds and that kind of stuff, but they tend to raise their own fund so that they can put that to work. And the people who invest in the startup studio are kind of like, okay, I believe in you guys. Like, here's $5 million to like build X number of companies to kind of try out, and then they get their equity share and all that. So it's more traditional for startup studios to kind of just like raise their own funds rather than go through VCs. Although VCs may invest in companies that come out of startup studios, but I don't think I've heard of a VC investing in a startup studio.
Okay. And just last question, sorry.
Yeah.
On a totally different topic, how would you compare, sales in the US versus sales in Southeast Asia, both in terms of like marketing efforts and direct sales?
When you say sales, what do you mean? Like, how hard is it to kind of like sell salespeople? Can you elaborate a little bit more?
I think if I look at SaaS in the US, it's going to be a very much PPC focused, paid ads, SEO.
Channels. You're talking about channels, like which channels work best?
I don't see that working too much in Asia in general. It seems to be a lot more relationship building. So I imagine that kind of also limits yourself and when you invest in different ideas and in propelling your startups, right?
Yes and no. Here's what I mean. I do think business in Southeast Asia is kind of more relationship driven, especially in certain countries like Indonesia. Like they really kind of like relationships really kind of matter there. Maybe Singapore a little bit less, but it still kind of matters. But Indonesia is very strongly that way. So I think there's larger kind of like direct sales teams that work out this way. I have seen people that have done kind of paid marketing and that kind of stuff, but mainly to just like drive top of funnel, and then they kind of close very quickly with direct sales. The thing that I would think that's maybe the nuance here, which actually keeps companies, which makes it so companies can kind of like grow fast, like in the US. Salaries are just cheaper here, right? So like the thing I always kind of joke around with about is that $5 million in the US and San Francisco gets you like a 10-person team. $5 million in Southeast Asia will get you like a 110-person team, right? So you can just like get, frankly, there's like armies of salespeople that you can kind of like get to kind of build this kind of stuff. And so the economics of kind of like how you kind of build the companies are different, but so yes, I think you're kind of right. And then there's this nuance around kind of like how big you can hire.
Okay, cool. Thank you.
Yeah, thanks, Olivia. Hey, do we have any last questions? If not, I'll kind of like close it off because we're at the top of the hour.
I got a pack to go to the US tomorrow.
Any last questions? Going once, going twice. Okay, sold. Okay, thanks a lot, Hsu Ken. Any last words? Sure. Yes.
No, I mean, look, investors are very confusing. It's hard to kind of tell what they're looking for and all of that kind of stuff. And so if you feel sometimes kind of like lost and you're kind of not sure what to do, just know that like Brian and I felt all of those things many times, and we still feel like those things now. And so it's like totally normal. So I just want to say, like, it doesn't mean that you're a bad founder. It doesn't mean that you like don't know what you're doing. We frankly all don't know what we're doing. So this happened to us all over again when we were doing LP fundraising, because that was like a whole different thing. So we are doing this all over again. We don't know what we're doing. So it's totally okay. Yeah. If you guys have more questions, you can email Madhu, you can email me. If you have questions, or you have questions that maybe you didn't want to ask in a group, that's my email. Feel free to email me.
Cool. Thanks a lot, everyone, for coming and your questions. I think it was like quite interactive, actually. So thanks for that.
Cool.
All right. Take care, and we'll see you guys again soon, hopefully.
Thank you,
Cool.
Ken.
Bye.
Sure.
Thanks, guys.
Thanks, everybody. See ya.